So the next strategy that I'm going to discuss with you is a positional strategy, and I can do it in different stocks. I'm going to show you examples on Nifty and Bank Nifty, and I only use one indicator, which is pivot points, the standard pivot points. So when I say it's positional, that means I can hold the strategy or trade the strategy for the entire month, and that is why the time frame that I use is daily time frame. So what I'm showing you is the daily time frame. Let me show you the settings of the pivots also. So it's the normal pivots. So I've not changed any settings. The only thing that I require is the P, which is the pivot line, S1 and S2, and R1 R2. So both the R's are the resistance and both the S are the support. So let's look at what this strategy does. So as you can see here, the levels can be seen here. The orange are the resistance levels and the red are the support levels. Now generally how it works is, when we are talking about support and resistance, we know that these are very important levels. So whenever we talk about a resistance, which is the orange line, that means there are high chances that if a stock comes here, so if the stock goes up and comes here, there's a supply zone here and it might come down. And similarly, if a stock comes near its support, which is the red line, there's high chance that it can go up. So based on this, we will be taking the trades in our strategy. So if you see the current month, which I'm showing for March, the stock went up. It almost came close to the orange line, and that's when it reversed. And similarly, the stock came down, and when it came close to the support, it went up. So it is actually doing as per what the support and resistance theory says. And now we are going to see how we are going to actually use this fact to take the trade. So there are two ways of taking this trade. Either we can go for a naked trades. So when I talk about naked trades, let's say a stock comes near its resistance, and at that point of time we can either sell Nifty futures or we can buy Nifty put options. So this is for those who like to do option buying, but again I'm talking about monthly options here, since we are going to hold it for the entire month. And we can also do selling of Nifty call options, but it's always good idea to hedge your option trades. So in the case when we are selling call option, let's say in this case maybe around 17,600 call option, which is the at the money call option, we might want to buy, let's say 17,800 or 17,900 call option. We do that because we want to hedge our trade. So the next question is, which strike price, in case we are going for this trade, which strike price we can sell? We can sell the at the money. So in this case, you can see the at the money is actually 17,800, not 17,600. So let me just update this. The at the money is 17,800. So in this case, we will be buying around 18,000 call option. So whatever is the at the money, we can sell that call option because the market is going up, and then we can probably sell maybe buy two or three strikes away just to hedge our trade. So this could have been our first trade, and as soon as the price came near the bottom level, we can exit all these trades. So we can exit in profit, and then we can do the opposite. So now again we have three options. Either we can buy Nifty futures or we can buy a Nifty call option. Again we can do at the money call option, which is around 17,000, or we can sell a Nifty put option, which is around 17,000. But at the same time, I will buy a little cheaper put option, maybe 16,800 put option I will buy to hedge my trade. So this is the strategy that I will be trading. And again, as I said, it's a positional strategy. Let's take some examples on previous months. So if you see again, the stock started here, it touched the lower band. This is where I could have taken a buying entry. So this would have been my buying entry. Stock went up, so Nifty went up, basically touched exactly your resistance and came down. So this would have been my second entry, and again it ended up touching the lower band again. So you can see two very good trades here in the previous month. Let's probably take one more example. If we talk about this one, the stock actually opened, so Nifty actually opened right at the top. You can see right at the top, and then it fell down and finally was able to hit the lower band almost at the fag end of the month. Now in this case, you will notice that the resistance was taken on the pivot levels. the pivot level actually act as both support and resistance. So depending on whether the stock is showing downward momentum or upward momentum, we can take a trade on that. So whenever you see a stock reversing from the orange line, it will be a stronger movement, whereas if it reverses from the pivot line, it might be a little shallow movement. So this is an example on Nifty. Let's also see on Bank Nifty. So again, the setup remains the same. I'm just added Bank Nifty, and again, as you can see, if we see the current month here, Bank Nifty came up. As soon as it touched the R1 line, it got resistance and it was forced to come down. And finally, again, as soon as it touched the support, it went up again. So as you can see, this is how the strategy works. Also, one good thing about this pivot point indicators is that you will notice that the pivot point indicator is the same for the entire month, right? That what that means that these lines are very strong indicators, because they are not even moving. Because if you see other indicators like RSI or MACD, they keep moving for the entire month, but that is not the case in case of pivot points. They remain constant, but still we have seen that the stocks tend to respect these levels very much, and that is why this is a very good strategy, especially if you want to do positional trading.